Let's take a look at the market right now. 8 minutes to go in the trading session. All three majors lower on the day, not too far away from lows of the session. The Nasdaq now down 1.5%. Still kind of seeing some negative fallout from this report that there would be a restriction on the issuance of some Chinese visas. This, of course, coming as Luha and Steven Mnuchin set to speak, I believe, on Thursday down in Washington, D.C. Lower level talks happening right now between the U.S. and China as it relates to trade, but certainly a negative trade overhang here. And then, of course, next week we get into the heart of earnings season and all kinds of negative things that could be sitting there. But speaking of negative things that everyone hates, that'd be central banks. So central banks backed into interest rate or negative interest rate policies in a new study, according to the BIS. They outline a world in which central banks are actually doing fine, I think. And I think for me, Brian, the headline here was that, I know everyone didn't like this, but the BIS had to find in a study that expanding the balance sheet actually increased asset prices. Everyone was very upset about that. But I find it to be kind of a positive read on central bank efficacy, if you will.
Yeah, and I think that, so this is a BIS report. It's the Bank for International Settlements. It's actually an organization that's owned by the 60 central banks.
It's the central bank of central banks.
It's the central banks of central banks, and they all polled each other,
Yeah.
central banks which have implemented negative monetary policy, and said, what do you think about negative monetary policy? And surprise, they said it was great, it worked. The finding from the BIS was that negative interest rates did exactly what it was meant to do at a high level, right? Which is it was able to bring down long-term yields and basically message to markets where it was implemented, because it wasn't implemented in the US, implemented in Europe, implemented in Japan, but in those jurisdictions, it was indeed able to flatten the yield curve and make yields negative. Now, what they did find was that there wasn't an issue with cash hoarding, because this is, again, unconventional monetary policy. Had never been done before. People wondered, if you're going to pay a negative rate, wouldn't everyone just grab the money out of the banks? Because you would have to pay to keep the money in those banks.
Well, guess what? You're regulated to keep money in the bank.
Exactly.
That's why you make rules.
Right, and that's what they said. They said the pass-through wasn't down to the consumer level.
Yeah.
So yes, banks were receiving negative rates to leave money at the central bank, but ultimately banks didn't end up charging people who have retail deposits to keep that money there. So no bank run is good. The other thing that they found was that lending did increase, but I love the caveats that they had here. So on those aspects, it was a great success. They said it was fairly effective policy. On the negative side, they said, well, it did create frothy stock valuations. We don't know what the long-term effects of it are, and there may have been some liquidity issues in short-term money markets and also government bond markets. But aside from all of that, the negative interest rate policies worked. So great job.
I mean, the other side of it was saying, well, we should raise rates so that we could really wash out and, we could have riots in the streets. That way we'll have the correct monetary policy setting. Yeah, that's basically what the 2009, 2010 Wall Street Journal op-ed argument was, right? Runaway inflation, everything's going to be terrible, and those people are just wrong. Again.
Take your pain early.
The problem here is that for those that don't advocate for negative interest rate policy, you have to confront the fact that all these central banks are backed up against very low rates. So if it's not negative interest rate policy, it's got to be something else. It's going to have to be quantitative easing. It's going to have to be forward guidance or some combination of all of those things. So pick your poison. And because of the sheer nature that these are all unconventional, we need more studies like this. And it'd probably be better off if it were independent and not from the central banks themselves that can tell us what the actual effects of those things are. The problem is monetary policy operates on a lag, so we won't know until
long and variable.
And even this survey, as you point out, they kind of are saying the jury's still out. That is one of the risks.
On the longer term side. But on the short term side, they said it was very effective with contained side effects.
All right, Brian Cheung, you and I can defend the Fed later while Jen hates on the Fed.
I am not hating
The true color is showing now, Jen. True colors.
Hard money, Jen. That's right.
I love it.
That's right. Gold bug. All right.
Don't be afraid of your medicine.
There you go. God.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.